Hi, good morning, everybody. Good afternoon for East Coasters, I guess. My name is Carla Anderson. I'm joined by Skylar Sims here, and we're here from the Office of the Chief Auditor. It's really nice to be here today. I didn't have quite the trouble getting here that Dwayne did, so I'm grateful for that. It's nice to be here. Okay, once again, we're going to provide our standard disclaimer here. I think next time I'm going to wear a sandwich board that just says it, so we don't have to repeat it all the time. But again, the views that are provided here are in my official capacity as staff of the PCAOB, but the views expressed are my own, and they don't necessarily restrict the views of the board members, or any other members of the staff. So today, we're going to provide you an overview of the activities of the Office of the Chief Auditor, which includes an update on our current standard setting agenda, as well as some recently adopted standards and amendments. And we're also going to take a deeper look at QC 1000 that Chair Williams mentioned briefly, which is the new quality control standard that we adopted last year. Before we start talking about specific projects, we just want to give you some background on the standard setting agenda. And again, I know Chair Williams mentioned some of this, but we're just going to recap a few things here. Our standard setting agenda is made up of several components, including short-term projects, mid-term projects, and research projects. And our short-term standard setting projects are those that are being actively developed by the staff and where a board action, that is proposal or adoption, is anticipated in fewer than 12 months. For example, we currently have projects related to AS 2510 on auditing inventory, as well as a project on other auditor reporting, which includes departures from unqualified opinions. And then our midterm standard setting projects are projects where staff is actively engaged, but the board action is not anticipated in the next 12 months. And then we also have a few ongoing research projects as well. So the standard setting agenda is intended to be dynamic, and there may be updates from time to time to the substance or the anticipated timing of the projects as we gain more insight based on our oversight activities or as circumstances change. And I'll also note that there are other rulemakings in addition to the auditing standards. Our Office of the General Counsel has led several of these initiatives, and they're also described on the standard setting agenda. So we're going to focus our presentation today on recently proposed and adopted standards, and won't be covering the in-process projects on the agenda, but all the standards and standard-related projects we're currently working on can be found by clicking on the standard setting, research, and rulemaking projects tab on the PCAOB website. So you can get to this menu from the PCAOB's home page if you go to the top and click Oversight, and then on the Standards page. And the board has many projects underway, and the PCAOB website really is the best place to go for all the information and all the resources that you need to understand what those activities are. So now I'm going to talk briefly about our most recent proposal. Since our update to this group last year, the board proposed to replace an existing standard on substantive analytical procedures, AS 2305. The standard that was issued by the CPA was AICPA in 1989 and was adopted by the PCAOB in 2003 as an interim standard. The current standard predates advancements in technology and the greater availability of data and information that we understand are influencing current practice. The proposed standard would strengthen and clarify the auditor's responsibilities when performing substantive analytical procedures. The comment period for this proposal closed in August, and we're in the process of analyzing all the comment letters that we received. And I just want to make a few comments about proposals and comment letters. And while we don't currently have any proposals with open comment periods, we encourage you to follow the PCAOB's rulemaking activities and participate in the comment letter process to provide your perspectives. I know it's been said a few times that the small firm perspectives are very important here, and we take them very seriously when we're doing our rulemaking. So it's important for them to be involved in the comment letter process. And I want you to keep in mind that when you're considering submitting a comment, you don't need to respond to every question in the proposal that we ask. Our proposals generally have a lot of questions, and they can be lengthy. And if you're reading through a proposal and want to respond to just one or a few questions, that's completely okay. It's all helpful to us. Even if you don't have a response to a particular question, feel free to submit any feedback that you might have. We take it all seriously. It's all very important to us. Okay, we're going to pause for another CPE code number here, so make sure you type this in. The code here is 812. Again, that code is 812. Okay, I think we've got all that. We'll move on here. So I'm going to return and go to the recently adopted standards and amendments, and we'll start with the auditor's use of confirmations. The new confirmation standard is effective for fiscal years ending on or after June 15th of this year. So last year at this forum, we discussed the provisions of this standard at length, so I'm not going to repeat that today, but I do want to mention some new implementation resources related to the confirmation standard that we've recently issued. So once adopted and approved, each of the projects gets an implementation page, which you can find on clicking of that tab on the standard page of our website, Implementation Resources. The page includes a summary of the new standard and amendments and any relevant implementation guidance and resources that the staff issues. And the resources vary depending on the nature of the standard and the extent of changes required in order to comply. And for confirmations, you're going to find a staff presentation that discusses the provisions of the standard in detail. We've also posted a separate knowledge check, which is a series of questions designed to let you test your understanding of the new standard and important aspects of it. And you can take the knowledge check multiple times. The results are anonymous. The PCAOB is not going to use the results to make them public or do any sort of analyzing. So you can use them as many times as you'd like to test your knowledge. And speaking of guidance, I also want to mention that aside from the guidance on the implementation of the new standards, I'll mention again, as some others have mentioned, that the PCAOB's website has a wealth of information on other topics in the form of spotlights or other resources. And the documents can relate to current events, or they can be to highlight observations from PCAOB oversight activities. For example, last fall, the PCAOB staff posted new resources related to the auditor's consideration of fraud, and the page highlights important PCAOB and SEC resources regarding the auditor's consideration of fraud in the audit, including an overview of the auditor's responsibilities under PCAOB standards, links to PCAOB and SEC guidance, PCAOB inspection highlights, and relevant PCAOB and SEC enforcement actions. And another quick comment about resources is that, in general, if you see a need for guidance in a particular area, or if you have ideas for other implementation tools and materials, please reach out and let us know. And we're trying to provide implementation resources that are going to be in different formats to try to help a broad range of different people in ways that they learn differently. So any input, once again, is greatly appreciated in that area. So moving on to the next recently adopted standard that we talked about a little bit earlier on in the session, but I'll bring up a little bit more now, is last year the board adopted a new standard titled AS1000, General Responsibilities of the Auditor in Conducting an Audit, and that was approved by the SEC last August. And the general principles and responsibilities of the auditor include reasonable assurance, due professional care, professional skepticism, independence, competence, and professional judgment. So these concepts are not new. Currently, the general principles and responsibilities are addressed across 4 interim standards that the PCAOB adopted in 2003. AS1000 replaces those standards and reorganizes and combines the general principles and responsibilities into a single standard. And while the existing responsibilities haven't changed, we have made updates to achieve consistency with other PCAOB standards. For example, some of the updates to streamline and improve the consistency include eliminating outdated or inconsistent language or using the terms should and must as defined by PCAOB rules. AS1000 also reminds auditors of their obligation to protect investors and emphasizes that this responsibility provides important context to the auditor's work when applying the requirements of PCAOB standards. So while the new standard doesn't create any new principles, it provides a more logical presentation to make the requirements easier to read, understand, and apply. As noted on the slide, in addition to the new standard AS1000, the project also included important amendments to other PCAOB standards. Excuse me. Sorry, getting stuck in my hair. The related amendments address areas that are fundamental to the conduct of an audit, including clarifying the auditor's responsibility to evaluate whether the financial statements are presented fairly, clarifying the engagement partner's due professional care responsibilities, and accelerating the date to assemble a complete and final set of audit documentation to 14 days. The first set of amendments mentioned on the slide rescinds AS 2815, which was the meaning of presents fairly in conformity with generally accepted accounting principles, which was an interim standard. The amendments clarify those requirements and bring them into AS 2810, evaluating audit results. The next set of amendments emphasizes certain responsibilities of the engagement partner for the supervision and review of the work of other engagement team members, and I'm going to touch on what that means in a bit. And the last amendment on the slide is a change to the documentation completion date, and I know we got a question earlier on that, so hopefully I'll be able to answer that here. So originally, when the timing was established, work papers were primarily in physical papers, right? This was back in 2003. Allowing 45 days for completing the documentation made sense, especially for multi-location or multinational audits. But since then, we've seen practice that advancements in technology have made it easier to prepare and archive work papers much more quickly than the 45-day period. So most firms use an electronic platform to maintain their audit work papers. So AS1000 project accelerated the documentation completion date from 45 days to 14 days. A few points about the amendments to the engagement partner's responsibilities. These are also not new responsibilities, but rather a clarification of the extent of the planning, supervisory, review, and documentation activities to be performed by the engagement partner as part of exercising due professional care. The slide summarizes the extended documentation that the engagement partner is required to review. Because the engagement partner has primary responsibility for the audit, it's critical for the partner to review sufficient documentation for specific audit areas that are deemed important to support the auditor's opinion. And the amendments also require the partner's review to be completed prior to the report release date. So the slide here shows effective dates for the requirements included in the AS1000 rulemaking. Except for the documentation completion requirement date, the updates will take effect for audits of financial statements for fiscal years beginning on or after December 15th of 2024. In response to comments that we received on the proposal, revisions were made in the adopting release to take a phased approach and provide smaller firms with additional time to comply with the new documentation completion dates. Therefore, for firms that during the calendar year ending December 31st, 2004 issued audit reports with respect to more than 100 issuers, the 14-day documentation completion date requirement is effective for audits of financial statements for fiscal years beginning on or after December 31st of 2024. But for all other firms, that is those with fewer than 100 issued audit reports for issuers, that completion date requirement is effective for audits of financial statements in fiscal years beginning on or after December 15th of 2025. So smaller firms are going to have an extra year to comply with that requirement. The next project I want to cover, I'll call it the Technology Amendments Project. The much longer formal name is on the slide there that I'll let you read. The technology amendments were adopted by the board in June of last year and approved by the SEC on August 20th of last year. They primarily affect two standards, and that's AS 1105, audit evidence, and AS 2301, the auditor's response to risks of material misstatement. The amendments address certain aspects of designing and performing audit procedures that involve technology-assisted analysis, sometimes referred to in practice as data analysis or data analytics. Technology-assisted analysis has become more prevalent in practice. Auditors are using technology-based tools to obtain and analyze more information in different ways. For example, technology-assisted analysis has been used to examine correlations between different types of transactions or to compare company-produced information to auditor expectations or third-party information. The amendments are focused on technology-assisted analysis, and they're not intended to address specific matters related to other technology applications, such as artificial intelligence. But the amendments are an important stepping stone in modernizing PCAOB standards. And while the reason for the technology amendments stems from the use of technology-assisted analysis, the amendments themselves apply to all audits, whether or not technology-assisted analysis is used. So with that as the background, I'll provide an overview of the key amendments, starting with those made to AS 1105. So first, there's a provision that if the auditor uses an audit procedure for more than one purpose, the auditor is required to design and perform procedures to achieve each objective. So for example, if a procedure is designed to be both a risk assessment procedure and a substantive procedure, the procedure needs to achieve each of the intended objectives. Next, the amendments address the auditor's responsibilities when evaluating the reliability of external information provided by the company in electronic form that the auditor uses as audit evidence. So AS 1105 already provides auditor responsibilities for evaluating the relevance and reliability of audit evidence, including requirements for testing the completeness and accuracy of company-produced information. The new requirement listed on the slide, which is now paragraph 10A of AS 1105, relates to the reliability of information in electronic form that the company obtained from one or more external sources, which is then provided to the auditor. It's important to note that this requirement applies to information that the auditor plans to use as audit evidence. Auditors aren't required to test every piece of external information provided by the company to the auditor in electronic form. Consistent with other provisions of AS 1105, the new requirement is risk-based and doesn't prescribe the nature, timing, or extent of the auditor's procedures. The amendments also emphasize the importance of controls over information systems as it relates to the reliability of information to be used as audit evidence. This continues to increase in importance as auditors often use larger volumes of data and information in electronic form from the company. With respect to With respect to AS 2301, the technology amendments include a new section that describes test of details and specifies the auditor's responsibilities when investigating items identified through a test of details. Under the new provisions, when performing a test of details, the auditor is required to apply audit procedures that are appropriate to the particular audit objectives to each item selected for testing. The amendments to AS 1105 and AS 2301 will take effect for audits of financial statements for fiscal years beginning on or after December 15th of 2025. And that's going to bring us to QC 1000, and this is the standard that becomes effective on December 15th of this year. So because of the significance of this, we're going to spend the rest of our time up here today with you going through this standard in detail. And I'm going to turn it over to Sky, but first I think we have another code word that you want to make sure to input, and that code word is 413. Sweet.
Okay, thanks, Carla. Good morning and welcome, everyone. As Carla mentioned, my name is Skylar Sims, and we're really excited to provide you with an update and overview of the new quality control standard, QC 1000, a firm system of quality control. So given that the intent of this session is really to provide an overview, we will not be discussing all of the nuances of the standard and the related amendments, but we'll highlight certain areas that are applicable to smaller firms. As a result, we encourage everyone to read the adopting release in order to gain a more complete understanding of the new standard and the related amendments. So I want to start this session with providing an overview of QC 1000, discussing its applicability and the objective, and then Carla will then walk us through an overview of the components and also discuss the roles and responsibilities in a firm's QC system and the firm's risk assessment process. I'll then wrap the session up by discussing the monitoring and remediation process. So let's go ahead and dive in. So QC 1000 is a new standard that supersedes the existing QC standards QC 20, QC 30, and QC 40. QC 1000 also supersedes the existing SECPS practice section, known as SECPS requirements. The standard requires a rigorous annual evaluation of the firm's QC system and related reporting to the PCAOB on a new form QC. Firms are able to submit this form using the existing RASR system. So in connection with the adoption of QC 1000, the board adopted other changes to its standards, rules, and forms. These include, among other changes, expanding the auditor's responsibility to respond to deficiencies on completed engagements under an amended and retitled AS 2901, responding to engagement deficiencies after issuance of the auditor's report. Also, the board replaced its existing standard ET 102, integrity and objectivity, with a new standard, EI 1000, integrity and objectivity, to better align the board's ethics requirements with the scope, approach, and the terminology of QC 1000. So let's take a closer look at the QC 1000 timeline. The new standard and related amendments will become effective on December 15th of this year, that's 2025. This means that a firm's QC system needs to be designed by December 15th, 2025, and a firm will need to be ready to start implementing and operating it from that date onwards in accordance with QC 1000. The firm's first evaluation date will be as of September 30th, 2026, with the first filing of Form QC by November 30th of 2026. So what's changed from QC 20, QC 30, QC 40, and those SECPS requirements? So first, there is an emphasis on accountability, firm culture, tone at the top, and firm governance through requirements for specified roles within the responsibilities for the QC system, including at the highest levels of the firm, and quality objectives that link compensation to quality. QC 1000 also includes a new risk-based approach, which should drive firms to proactively identify and manage the specific risks associated with their practice. A set of mandates, including required risk assessment, specified quality objectives, and specified quality responses, which should assure that the QC system is designed, implemented, and operated with an appropriate level of rigor. There are also new requirements that address changes in the audit practice environment, including the increasing participation of other firms and other outside resources, the role of firm networks, the evolving use of technology and other resources, and the increasing importance of internal and external firm communications. QC 1000 also includes broader responsibilities for monitoring and remediation of deficiencies to encourage an ongoing feedback loop that drives continuous improvement. And finally, as I've mentioned already, there is a rigorous annual evaluation of the firm's QC system and related reporting to the PCAOB, certified by key personnel to underscore the importance of the annual evaluation of the QC system, reinforce individual accountability, and support PCAOB oversight. So let's take a closer look at the applicability of QC 1000 and who is affected. So all firms that are registered with the board are affected by the new standard, but not all requirements of QC 1000 apply to all firms. All registered firms are required to design a QC system that complies with QC 1000. Firms that perform or have responsibilities with respect to engagements under PCAOB standards are required to implement and operate their QC system. Engagement, there it is a defined term in QC 1000. It appears in paragraph A3 of Appendix A. It is defined as any audit, attestation, review, or other engagement performed under PCAOB standards that's either led by a firm or in which a firm plays a substantial role in the preparation or furnishing of an audit report as defined in PCAOB Rule 1001 P2. So let's unpack the applicability for a moment. Under QC 1000, as I've already mentioned, firms that do not have responsibilities with respect to engagements are only required to design a QC system that meets the requirements of QC 1000. We refer to this as scaled applicability. At all times that a firm is required to comply with the applicable professional and legal requirements with respect to any of the firm's engagements, the firm is required to design, implement, and operate an effective QC system. That is, comply with all of the requirements of QC 1000. We refer to this as full applicability. QC 1000 defines applicable professional and legal requirements in paragraph A2 of Appendix A, also called APLR. to include professional standards as defined by the PCAOB and rules of the PCAOB that are not professional standards. It also includes, to the extent related to obligations and responsibilities of accountants or auditors in the context of engagements or in relation to the QC system, rules of the SEC, other provisions of U.S. federal security laws, ethics laws and regulations, and other applicable statutory, regulatory, and other legal requirements. To provide you with some clarity regarding parts of the APLR definition, an example of a rule of the PCAOB that is not a professional standard is PCAOB Rule 2200, Annual Report, which requires a firm to file an annual report on Form 2. An example of ethics laws and regulation includes ethics laws under jurisdictions that accountants are subject to. This does not include, for example, the AICPA's Code of Conduct. However, we do recognize that many states adopt the AICPA Code of Conduct as part of their ethics laws. If that's the case, then it would fall under the APLR definition. So the graphic on this slide presented illustrates the determination as to whether a firm is subject to scaled or full applicability. For reference, this graphic can be found in the scalability section of the adopting release on page 62. And an important key takeaway here from this slide is that the firm that is not currently performing any engagements may nevertheless have to comply with APLR with respect to a previous engagement or a future firm engagement. For example, it may have a documentation retention obligation under AS 1215 audit documentation with respect to a past engagement or responsibilities for the acceptance of a new engagement that have to be performed before the engagement is conducted. So, for example, considering whether the firm is independent and whether the services are permissible. In these examples, the firm is under full applicability, even if it currently does not perform any engagements. So let's move on and talk about what it means to design a QC system if a firm is subject to scaled applicability. So QC 1000 includes specific requirements in paragraph 6, which require firms to assign QC-related roles and responsibilities, establish quality objectives, annually identify and assess quality risks to the achievement of those objectives, and design quality responses to address those quality risks. Firms under scaled applicability are required to design a monitoring and remediation process. And finally, there are requirements regarding documentation of the design of the QC system. So regardless of whether a firm is subject to scaled applicability or full applicability, firms do not have to start from scratch when designing their QC system. They can build on their existing QC systems developed under other quality management standards, such as ISQM1 or SQMS1. QC 1000 shares the same basic structure with other quality management standards with the same 8 components and a risk-based approach to quality control. Firms can develop a single QC system for their entire practice that satisfies both PCAOB requirements and the requirements of other quality management standards to which the firm is subject. So when designing a QC system to comply with QC 1000, firms may also consider policies and procedures they already have in place under other quality management standards. If a firm is subject to scaled applicability, they would only need to operate policies and procedures specific to QC 1000 when they take on responsibilities related to PCAOB engagements. Now, you may be wondering, how should a firm subject to scaled applicability think about designing a QC system or a compliant risk assessment process? Again, a firm can utilize its risk assessment process already developed under other quality management standards and add any additional quality risks the firm would likely face if it performed PCAOB engagements, taking into account the size and complexity of the firm. So, for example, one potential quality risk could be insufficient knowledge about the PCAOB rules and standards and the SEC's independence requirements that a firm would be subject to once it is engaged to perform PCAOB engagements. In this case, a firm can reevaluate its current policies and procedures that address training to determine whether it needs to add additional mandatory training on the PCAOB rules and standards and the SEC's independence requirements. The firm would only need to operate this policy and procedure once it takes on a PCAOB engagement. That said, it is important to note that for other QC areas, such as ethics and independence component, the standard does not introduce new independence requirements. As long as the firm's existing policies and procedures address the related quality risks of that component, nothing further needs to be done. And we have our next code word, which is 194. Make sure to type this into your conferences IO. So now that we've covered the applicability of QC 1000, let's ground ourselves in what the objective of a firm's QC system is under QC 1000. So QC 1000 specifies that an effective QC system provides a firm with reasonable assurance that the firm, each member of firm personnel, and each other participant conduct each of the firm's engagements and fulfill their other responsibilities that are part of or subject to the firm's QC system in accordance with APLR, and that each engagement report issued by the firm is in accordance with APLR. This is referred to as the reasonable assurance objective. So we're going to dissect some of these terms used in the reasonable assurance objective to better understand the scope of the standard. The concept of reasonable assurance is consistent with QC 20, which is the board's current quality control standard. QC 1000 becomes effective again on December 15, 2025. So, for example, under QC 20, a QC system is a process to provide a firm with reasonable assurance that its personnel comply with applicable professional standards and the firm's standards of quality. In the context of engagement performance, QC 20 also required the system of quality control to provide reasonable assurance that the work performed meets applicable regulatory requirements. However, QC 1000 goes further and extends the reasonable assurance objective to cover not just the firm and its personnel, but also other participants. Before we move on to the next slide to discuss the defined terms of firm personnel and other participants, I want to emphasize again that under QC 1000, a firm's QC system operates not just over firm personnel, but also over the firm's use of other participants. Okay, so on this slide, we've got a graphical depiction of the definition of firm personnel from the adopting release, which appears on page 51. The definition can be found in the appendix in paragraph A5, and the definition appears in the middle of the screen. And that firm personnel is going to be individual proprietors, partners, shareholders, members or other principals, accountants, and professional staff of a registered public accounting firm whose responsibilities include assisting with the performance of the firm's engagements or the design, implementation, or operation of the firm's QC system. That includes engagement quality reviews. Professional staff includes employees as well as individuals such as non-employee contractors and consultants who work under the firm's supervision or direction and control, and they function as the firm's employees. So these individuals would include, for example, secondees, lease staff who work under the supervision or direction and control of the firm. Professional staff does not include persons engaged only in clerical or ministerial tasks. You can see some examples of firm personnel in the blue circles next to the definition. Again, this chart can be found on page 51 of the adopting release. There we go. Okay. Other participants. So on this slide, we have another graphical depiction of the definition of other participants from the adopting release. This can be found in paragraph A7 of Appendix A, and in the middle of the screen, again, the definition with respect to the work performed in connection with the firm's QC system or the performance of its engagements. Other participants are accounting firms, whether foreign or domestic, registered or unregistered, accountants and other professionals or organizations other than firm personnel whose responsibilities include assisting with 1, the performance of the firm's engagements, or 2, the design, implementation, or operation of the firm's QC system, including engagement quality reviews. So again, you can see some examples of other participants in the blue circles next to the definition. I do want to point out that the persons performing some roles, such as engagement quality reviewer or personnel at shared service centers, may be either firm personnel or other participants. And it depends on their relationship to the firm. So for example, an engagement quality reviewer employed by the firm would be considered firm personnel, whereas one that has been contracted from outside the firm that is not functioning as a firm employee would be an other participant. I'd also like to clarify, and very important point here, that the QC system does not need to operate over other participants. Rather, a firm would need to consider what potential quality risks could result from the use of other participants, including other firms, outside specialists, or external EQRs. And then the last point that I'd like to make here is that QC 1000 references firm personnel and other participants throughout the standard. The firm would need to understand how other participants fit into their QC system and their engagements, and what specific quality risks could be identified, and develop quality responses to address those quality risks. I think we have another code word, 318. And I will now turn it back over to Carla to walk us through the components of the QC system.
Thanks, Guy. Okay, so now that we've covered the objectives, I just want to briefly talk about the actual components of a firm's QC system under QC 1000. QC 1000 defines 8 integrated components that are required to be included in the design of a firm's QC system. These components are consistent with other quality management standards. So the 2 process components are the firm's risk assessment process, we sometimes refer to that as FRAP, and the monitoring and remediation process, we refer to that as M&R. The other 6 components are non-process components that address aspects of the firm's organization and operation, and those are governance and leadership, ethics and independence, acceptance and continuance of engagements, engagement performance, resources, and information and communication. So FRAP is the process the firm's required to follow in implementing a risk-based approach. On the graphic, we can see it wraps around the components related to the firm's organization and operations. M&R is the process that provides the firm with relevant, reliable, and timely information about the design, implementation, and operation of QC 1000. We can see it also wraps around the other components as it's part of the feedback loop with FRAP. Also, M&R produces information that's used by the firm when performing its evaluation and reporting on the effectiveness of its QC system. Although evaluation and reporting is not a component, the firm is required to annually evaluate the effectiveness of its QC system and report to the PCAOB on the QC system evaluation. The standard also includes requirements that address individual roles and responsibilities in the QC system, as well as documentation of the QC system. Those requirements aren't depicted on the graphic, but they are requirements of the standard. Before we move on, I want to mention that the resources component introduces another term, third-party providers. So Sky just talked about firm personnel and other participants, but I want to briefly talk about what a third-party provider is. The standard addresses resources used by the firm that are sourced from third-party providers. And these are individuals or organizations other than other participants that provide resources to the firm that are specifically designed for the use in the performance of engagements or to assist in the operation of its QC system. This diagram, which is from the adopting release on page 53, provides several examples of them, and some of these you've probably seen in practice. For example, methodology providers or confirmation intermediaries. Now I want to spend a few minutes discussing the roles and responsibilities that QC 1000 requires the firm to have in its organizational structure. The standard requires firms to assign responsibilities to a few different roles, which are shown on this slide in the blue, red, teal, and gray boxes. The firm's also required to establish a direct line of communication from each individual assigned operational responsibilities, so the bottom three roles, to the individual assigned ultimate responsibility and accountability for the QC system as a whole, so the role on the top there. And I'm going to point out a few specifics of each of the roles next. But first, I want to highlight an important point, which is that individuals with ultimate responsibility and accountability for the QC system as a whole, and the individual with operational responsibility and accountability for the QC system as a whole, are required to certify the firm's evaluation of its QC system on Form QC. We have those highlighted with stars here on the screen. I also want to point out that individuals that fill the roles are required to be firm personnel. While these individuals may have other participants assisting with their responsibilities, such as the firm's network or consultants external to the firm, firm personnel are required to fill these roles and to bear the responsibility and accountability, if applicable, that comes with the role. Let's go over a couple stipulations regarding assigning individuals to these roles. So depending on the nature and the circumstances of the firm and its engagement, the firm may assign one individual to more than one of the QC system oversight roles. For example, in a smaller or less complex firm, the individual with ultimate responsibility and accountability for the QC system as a whole may be the same person that's assigned operational responsibility and accountability for the QC system as a whole. And in a particularly small firm, that individual may also be assigned other operational responsibilities, such as for the ethics and independence component and or the monitoring and remediation component. So while one person can fill more than one role, a firm cannot split responsibility for any of the three roles with operational responsibility. What they can do is structure its organization so that the single individual with operational responsibility is supported by multiple individuals. Also, some firms might seek assistance from other participants in performing some of their monitoring activities. Nevertheless, a single individual within the firm is required to remain responsible for the operational responsibilities of the assigned roles. Finally, a reminder of what I mentioned earlier is that if a firm has co-principal executive officers, each of them is ultimately responsible and accountable for the QC system as a whole. So said another way, more than one individual is permitted to have ultimate responsibility and accountability for the QC system as a whole. Okay, now that we've gone over roles and responsibilities, I want to move on to discuss the first step to designing an effective QC system, which is the firm's risk assessment process. QC 1000 requires firms to establish quality objectives, which is defined in paragraph A10 of Appendix A of QC 1000. Establishing quality objectives is the first step in the risk assessment process and forms the basis for the identification and assessment of quality risks and the design and implementation of quality responses. The standard defines quality objectives as the desired outcomes in relation to the components of the QC system to be achieved by the firm for each of the 6 components that address aspects of the firm's organization and operations. Annually, firms are required to identify and assess the quality risks to achieving each of their quality objectives. The standard defines quality risks in paragraph A12 as risks whether or not related to intentional acts by firm personnel or other participants to deceive or to violate APLR, that individually or in combination with other risks have a reasonable possibility of occurring, and if they were to occur, a reasonable possibility of adversely affecting the firm's achievement of one or more of its quality objectives if they do occur. Unlike quality objectives, which are specified by QC 1000, quality risks are not specified in the standard. Instead, firms are required to identify their unique quality risks based on their own facts and circumstances. And one important point that I want to make is that quality risks need to be specific to the firm and the engagement it performs. Identifying quality risks as the inverse of a quality objective, that is, identified quality risks that the quality objective will not be met, that generally would not be specific to a firm or its engagements, may result in a firm designing quality responses that are not effective to achieving the quality objective. Also, firms should exercise caution when using third-party issued risk assessment templates because the examples of quality risks provided in the template may not be specific enough or reflect the firm's circumstances and the nature of its engagements, and again may result in the firm designing quality responses that are not effective in addressing the quality risks and achieving the quality objectives. In order to identify quality risks, the standard requires the firm to obtain an understanding of the conditions, events, and activities that may adversely affect the achievement of the firm's quality objectives. Appendix B of the standard provides examples of considerations related to the nature and circumstances of the firm and its engagements that may give rise to quality risks. Specific examples in Appendix B are meant to be illustrative rather than a checklist for every firm to consider. Utilizing examples of considerations from Appendix B will help firms to identify quality risks that are specific to the firm and the engagements it performs. And again, I want to emphasize that quality risks should be specific to the firm and its engagements. So next I want to do a quick activity related to using Appendix B. So I want you to just read the scenario presented on the screen, and using Appendix B, just identify a couple examples in Appendix B that are relevant to obtaining an understanding of the nature and circumstances of the firm. Now I know we don't have printed copies of Appendix B for you, but they should be accessible on Conferences.io. And I'm just going to give you a few seconds to look through that, and then I'll talk through a couple observations that we had ourselves when we were getting ready for this. Okay, I think that was probably enough time to kind of think about it. Is anybody interested or willing to shout out maybe an example of something from Appendix B that would be relevant in this scenario? If not, I'd be happy to give some thoughts. Okay, well, first, I guess, we can think about the expansion by opening the second office in the neighboring city, the independent operations of each office, and the simple management structure, right? So relevant examples there could be paragraphs B2 and B4 in Appendix B. So B2 highlights the complexity and operating characteristics of the firm, and then B4 includes examples of the characteristics and management style of leadership. So then another example would be with the firm taking on a new client in an unfamiliar industry. You could take a look at paragraph B6, which is about the resources of the firm, and it highlights areas such as the availability of skilled individuals as well as the availability of other resources, financial, technological, or intellectual. So you can kind of see how using Appendix B is going to help you in your risk assessment process. And it's important for a small-sized firm to think about these considerations and understand the conditions, events, and activities that may adversely affect the achievement of the quality objectives, because this really leads to the basis of developing your risk assessment. Okay, so moving on to the next step of the firm's risk assessment process. Once the firm identifies and assesses its quality risks, it's required to design and implement quality responses to those quality risks. Quality responses are defined in paragraph A11, and they're policies and procedures designed and implemented by the firm to address quality risks. In addition to the quality responses that firms design on their own through the risk assessment process, QC 1000 also includes specified quality responses. Specified quality responses are mandated policies and procedures that apply in some cases to all firms, and in some cases to only firms with a larger PCAOB audit practice, that is, firms that issued audit reports with respect to more than 100 issuers during the prior calendar year. QC 1000 includes specified quality responses for every component, non-process component, except for the engagement performance component. So because the specified quality responses are a subset of quality responses, while they may address multiple quality risks within multiple components of the firm's QC system, They're not intended to be comprehensive and alone will not be sufficient to enable the firm to achieve all of its established quality objectives of the firm's QC system. Said another way, specified quality responses are not the minimum set of quality responses the firm is required to design, implement, and operate in order to meet the reasonable assurance objective. The firm is going to have to design and implement their own quality responses in addition to those specified quality responses required by the standard. And then one last important point I want to make is that designing and implementing appropriate quality responses, that's the firm's policies and procedures, they standardize the firm's actions and can help the firm consistently apply with APLR. So it will be helpful not just for complying, but also with the operations of your firm. Lastly, as part of the firm's risk assessment process, firms are required to have policies and procedures related to the modification of quality objectives, quality risks, and quality responses. So these might vary depending on the size and complexity of the firm and the types and variety of engagements that it performs. So before we move on, I want to point out a few remaining points related to the firm's risk assessment process. And the first is that the risk assessment process is iterative and ongoing, so that new or developing risks are identified and addressed as they emerge. So said another way, firms will need to have a process designed to identify changes in risk. Also, the requirements regarding the risk assessment process generally apply only to work performed under PCAOB standards. And finally, there are a number of ways to approach the design and implementation of the risk assessment process. When considering how to meet these general requirements, firms may wish to consider who might be involved in the process and how often to enable a proactive and effective process that is responsive to changing circumstances. For smaller and less complex firms, the risk assessment process may be centralized and involve only a few individuals and less frequent meetings. Okay, that is going to do it for the firm's risk assessment process. I'm going to hand it back to Sky after I give you a second here to input your next code, which is 601.
Okay, and before I move on to monitoring and remediation, I did want to address a question that we got through Conferences IO, and the question was, for firms in an APS structure, alternative practice structure, does the PCAOB believe both the attest firm CEO/managing partner and the advisory CEO should share the role of ultimate responsibility, or should it lie solely with the attest firm CEO? So that is going to be the attest firm CEO only, and that is because that advisory firm is likely not a registered firm with the PCAOB, so that individual is going to have to be the attest firm. Thank you for the question. Okay, so let's spend a few minutes discussing the second process component. Carla just went over the firm's risk assessment process, and the other process component in QC 1000 is the firm's monitoring and remediation process, or M&R. So this graphic on the slide illustrates the steps of the monitoring and remediation process under QC 1000. We'll briefly discuss each step of the process next, but before we go into that, I want to make an important overarching point, and one that firms are going to need to consider when they're designing their monitoring activities, and that is that under QC 1000, individuals are required to remain objective when performing monitoring activities. Unlike the previous quality control standards and other quality management standards, self-monitoring is not permitted within the firm's monitoring and remediation process. What this means is that individuals are not permitted to perform monitoring procedures over the same areas for which they are responsible. A required quality objective in the resources component states that individuals assigned to perform activities within the QC system have the competence, objectivity, and time to perform them. And consequently, that means that individuals generally cannot perform monitoring activities over their own work because they would not be objective. Okay, so let's talk about designing and performing activities to monitor engagements. and the firm's QC system, which is the first step in our monitoring and remediation process. So QC 1000 includes requirements related to monitoring activities over completed engagements, in-process engagements, and engagements performed at a level below a substantial role. Some of these requirements vary based on the size of the firm. So first, starting at the top, all firms are required to perform monitoring activities over completed engagements. One element of this requirement is that firms inspect at least one completed engagement for each engagement partner over a cyclical period. Now, firms can choose any cyclical period that achieves their quality objectives, but can adopt a cycle longer than 3 years only if they are able to demonstrate how that cycle is adequate to provide a reasonable basis for detecting engagement deficiencies and QC deficiencies. QC 1000 also requires firms to incorporate a level of unpredictability in the selection and monitoring of completed engagements. Next, the monitoring of in-process engagements is required of firms with larger PCAOB audit practices, and all other firms should consider monitoring these types of engagements. Last and similarly, all firms that participate at a level below a substantial role in another firm's engagements are required to consider performing monitoring activities over such work and determine whether it's appropriate to do so given the firm's particular facts and circumstances. And there are factors in QC 1000 that a firm is required to consider when they're determining the nature, timing, and extent of the engagement monitoring activities, and those factors can be found in paragraph 64. QC 1000 includes an optional scalability consideration, which is meant to assist smaller firms in their design, implementation, and operation efforts of monitoring activities. So in general, engagement monitoring activities are performed only on engagements, as defined in paragraph A3 of Appendix A to QC 1000. So that's basically any engagements performed under PCAOB standards. But some firms perform only a small number of PCAOB engagements, and in the extreme case, a firm that only has one issuer engagement would have to monitor the same engagement every year. So in order to address this, the board permits firms that issued engagement reports with respect to 5 or fewer engagements during the prior calendar year to include audits not performed under PCAOB auditing standards in their engagement monitoring activities. So next, let's discuss QC system level monitoring activities, which are the second type of monitoring activities that are required by QC 1000. So the QC system level monitoring activities are directed at the performance of activities under the requirements of QC 1000. This includes the requirements relating to the 6 components that we briefly covered earlier, as well as the firm's risk assessment process and the monitoring and remediation process itself. So similar to the engagement monitoring activities, QC 1000 also includes factors for a firm to take into account in paragraph 65 when determining the nature, timing, and extent of that QC system level monitoring activity. So many of the factors are similar between the two, engagement level and also QC system level. I also want to talk about networks for just a second. So in circumstances when a network performs monitoring activities relating to the firm's QC system or its engagements, the firm has to follow certain requirements in QC 1000 that relate to monitoring activities performed by a network. But ultimately, regardless of what monitoring activities a network might perform on behalf of a firm, the firm is ultimately responsible for its QC system. So let's move on and let's talk about how to determine if engagement deficiencies exist and how to respond to them. So once again, during the next few slides, I'm going to introduce some new terms, which are highlighted in red font on the slide, and these definitions can all be found in the appendix to QC 1000. So, an engagement deficiency, as defined in paragraph A4 of Appendix A to QC 1000, is an instance of noncompliance with APLR by the firm, firm personnel, or other participants with respect to an engagement of the firm, or by firm or firm personnel with respect to an engagement of another firm. An engagement deficiency could be an instance of noncompliance in which a firm didn't adequately support its opinion, or it didn't fulfill the objective of its role on the engagement, or other instances of noncompliance with APLR with respect to a firm's engagement. Firms are required to evaluate various information when determining whether an engagement deficiency exists, including, for example, information about engagement and QC system level monitoring activities, information from oversight activities by regulators, and other external inspections or reviews or other information of which the firm becomes aware. So a firm's determination that an engagement deficiency exists may pertain to an in-process engagement, a completed engagement, or any work that the firm performed on another firm's engagement. When an engagement deficiency is identified, the action the firm takes depends which of these three buckets the deficiency falls into. And one of the most important points I want to make here, and a final point that I'll make about engagement deficiencies, is that firms are required to evaluate whether similar engagement deficiencies exist in other in-process engagements, completed engagements, or any work that that firm performs on another firm's engagement. If similar engagement deficiencies are identified, QC 1000 requires the firm to respond to these engagement deficiencies in the same manner as the firm would respond to any other engagement deficiency it may identify. Understanding the nature of the engagement deficiency will assist the firm in determining the extent of the necessary evaluation. So, to illustrate, if the engagement deficiency was caused by an error in the firm's methodology for auditing a company's loan valuation allowance, then the firm would evaluate whether similar engagement deficiencies exist on engagements that were also using that methodology. As another example, if engagement team members did not comply with PCAOB standards when auditing accounts receivable because they failed to perform certain procedures in the firm's audit program, the firm would evaluate whether the persons who were responsible for performing the procedures and the person supervising the work participated in any other audit engagements accounts receivable testing, and if so, whether similar engagement deficiencies exist in those. In our outreach activities, we received questions about how to implement this requirement. That is, how to evaluate whether similar engagement deficiencies exist on other engagements. For example, is the firm expected to look at all engagements, some, or take a risk-based approach? It will be important to understand the reasons for the engagement deficiencies because that will inform the nature and extent of the procedures to be performed on the other engagements and work performed on other firms' engagements. And I want to emphasize that sampling is not appropriate when selecting which engagements to monitor when evaluating whether similar engagement deficiencies exist on other engagements. So as a quick break, I have a fun monitoring and remediation scramble. I know you've been waiting for this. I've got 4 terms on this slide. I don't think we need to work separately. If you know the answers, let's call them out. The first one, anybody have an idea what this could possibly be? Engagement deficiency. You got it. All right, second one, what are we thinking? There we go. Third. Yep. And last but not least? Very nice. Superstars, you guys have got everything. Wonderful. Okay, so moving on, let's start to talk a little bit about how to determine if QC observations and QC deficiencies exist. So firms are required to timely evaluate certain information to determine whether QC observations exist, including information from monitoring activities, from oversight activities by regulators or other external inspections or reviews, or any other relevant information that the firm might become aware of. QC observations is, again, a defined term in paragraph A9 of Appendix A. Basically, it's any information that may indicate a problem with the design, implementation, or operation of the firm's QC system. That includes all engagement deficiencies, as well as things like an error in the design or operation of a technology tool, in the firm's methodology, or any other information that suggests that the firm may not have achieved a quality objective. All engagement deficiencies are QC observations, but as I'm going to explain next, not all QC observations are QC deficiencies. So once the firm identifies QC observations, it evaluates them to determine whether QC deficiencies exist. The determination is based on the nature, the severity, and the pervasiveness of the matter that gave rise to the QC observation, and the likelihood that the matter could affect other QC system components or other engagements, and the severity of such an effect if it were to occur. QC deficiency is a defined term in paragraph A8 of Appendix A. And I'm not going to read this entire red box, but at a high level, a QC deficiency is a QC observation or a combination thereof that evidences either the firm hasn't achieved the reasonable assurance objective, or one or more quality objectives, or it hasn't complied with the requirements of QC 1000. The determination of whether a QC deficiency exists is based on two factors. The first is going to be the nature, the severity, the pervasiveness of the matter that gave rise to that underlying QC observation. And the second is the likelihood that the matter could affect other QC system components or other engagements, including in-process and completed engagements, engagements to be performed in the future, and work performed on other firms' engagements, and the severity of such an effect if it were to occur. Next, let's talk about performing root cause analysis of QC deficiencies. And I want to highlight three important points related to root cause analysis. The first is going to be that firms are required to perform a root cause analysis of all QC deficiencies, which involves identifying and evaluating those causal factors that led to each QC deficiency by understanding what happened and why. The second is going to be that the firm may perform root cause analysis on QC deficiencies individually, or they may group similar to QC deficiencies together. The requirements for root cause analysis are flexible. The firm's approach can vary, and procedures could take different forms depending on the circumstances, which allows for scalability. So some example procedures included in a firm's approach to root cause analysis may include interviewing engagement team members, firm leadership, using proprietary tools to analyze large amounts of data, and considering available performance metrics such as engagement hours, training records, audit milestones, or partner experience. And then finally, I want to talk a little bit about remedial actions, which Glenn touched on earlier today when he was discussing his section. And before I do that, I want to draw out one distinction from what Glenn went through regarding QC deficiencies and remedial actions. So I want to draw this distinction because on the one hand, we have remedial actions that are required under QC 1000. And on the other hand, we have the PCAOB's assessment of a firm's remedial efforts in response to quality control criticisms identified during PCAOB inspection. So these are distinct concepts, and they are subject to different processes, guidance, and objectives. So first, regarding remedial actions regarding QC deficiencies under QC 1000, as I'll discuss in a minute, paragraphs 75 and 76 of QC 1000 describe the requirements with respect to a firm's remediation of QC deficiencies. With respect to these requirements, firms should consult QC 1000 and its related implementation guidance. Now, regarding the PCAOB's assessment of remedial actions in response to QC criticisms identified during an inspection, if the PCAOB identifies a QC criticism during an inspection of a firm, and if the firm remediates the criticism within 1 year to the board's satisfaction, the criticism remains non-public in a PCAOB inspection report. The board's assessment of the firm's efforts to remediate a QC criticism identified during an inspection is governed by Section 104G2 of the Sarbanes-Oxley Act and PCAOB Rule 4009. And that process is the subject of separate PCAOB staff guidance. So under QC 1000, firms are required to design and implement timely remedial actions to respond to QC deficiencies, taking into account the results of the firm's root cause analysis and the nature, the severity, and pervasiveness of the QC deficiency. So now I want to highlight just 4 factors related to designing, implementing, and testing remedial actions. The timing of a firm's efforts to design and implement remedial actions depends on the results of the firm's root cause analysis and the nature, severity, and pervasiveness of the QC deficiency. In some circumstances, due to the extent of remedial actions that might be necessary to address the QC deficiency, a firm might design and implement temporary remedial actions until permanent actions can be designed and implemented. And in some situations, the extent of remedial action the firm needs to take to address a particular QC deficiency may be reduced by other compensating responses that the firm already has in place. If the remedial actions, including any relevant compensating responses, have been tested and found to be effective in addressing the issue, the firm might determine that based on the facts and circumstances, that no further remedial action is necessary. And then lastly, firms are also required to monitor the implementation and operating effectiveness of remedial actions to determine whether they were implemented as designed and operate effectively to remediate the QC deficiency. And if not, the firm takes timely actions until the monitoring activities indicate that the QC deficiency was remediated. So this was my last slide on the monitoring and remediation process. I know I am up against time here. Just wrapping this up, we discussed the components of the QC system, the applicability of QC 1000, and we took a little bit of a deeper dive into the firm's risk assessment process and monitoring and remediation. But again, I want to emphasize and implore you to take a look at the adopting release in full, read through the implementation guidance that we've begun to put together. And on that note, the QC implementation page is live and up and running on our website. It includes knowledge check, staff presentation, overview of the QC 1000, as well as some staff guidance documents, and we'll continue to add more to the page. And if you subscribe to PCAOB News, you will get updates when we add things to the site. The last thing I want to emphasize, and it goes to a question that we did receive in Conferences IO, is, again, I want to mention the QC workshops that Chair Williams alluded to at the beginning of her remarks. Those QC workshops will be an opportunity to ask questions, have a live dialogue. The information regarding the registering for them will be available in the next coming weeks. But again, those dates are May 13th in Washington, D.C., and then it will be in Dallas, Texas, early this summer. We don't have a date yet, but both of these events will focus on smaller firms' implementation of QC 1000. So please stay tuned for more information regarding those. And with that, we'll conclude our remarks. Thank you very much for your time.